Friends, this is Juanchito. Here I am teaching you accounting. Today, what we are going to do is to analyze the transactions. Okay, analyze the transaction. We are going to read the transaction and put the amounts in this chart. And we will also calculate the balances of each account. All right, talking about accounts, you see this chart is organized in such a way that you are able to see the accounting equation and also the accounts of each category, each element in the equation. Okay, so accounting equation goes like this. Asset equals liability plus owner's equity. Asset, under asset, all is space, you can see the asset accounts. You have cash. Cash is asset because it is valuable. You have supply. Supplies is also asset because your company uses these supplies for the operation of the business. Prepaid insurance is definitely an asset because it protects you from any kind of risk. And also account receivable, that is the debt in favor of you. When you collect it, you are going to have money. Liability, in this case, we have only one account, and the owner's equity, that is the capital. Capital is the account that summarizes the owner's equity. All right. So here we know that horizontal line horizontal lines are called the rows and vertical lines are called the columns. When a column and a line intersects, we call that a cell. In each of this cell, you are going to have two amounts, two values in it, and one is the balance, the other one is the amount of the transaction that is taking place. Alright, so let's get started. Okay, first of all, let me try to type to make sure I can type. Hello. What's up? Okay. Alright, so yes, I can type, and minus and plus, and yeah, I can do that. Very good. So let's start analyzing transaction. First transaction goes like this. Receive cash from owners as investment. Okay, when the cash is received, business has more cash. That means that we have to put a plus sign for cash, definitely. And we also have to put the amount, by the way. When you see investment, investment is when the owner putting money into the business, and that is definitely an increase to the owner's equity. Okay, so let's start doing something simple, shall we? The beginning balance, why don't we just put 0, right? 0 is the beginning balance, right? 0 is definitely the beginning balance. When the business starts, it doesn't have any money, so it starts from scratch. That is 0. Put 0 here. And the first transaction tells us Juanchito, the owner of the business, he takes out $5,000 and put into the business. So here we are going to put plus $5,000. And as we know, that is an investment, so owner's equity increase. I am going to put another $5,000 here. The rest of them, I will just add 0 to them. Okay, so let's remember, for each cell, you have to put two amounts to it. One is the balance, the other one is the amount of the transaction. Alright, after doing this first row, we are going to start with the second row. Okay, but when we start with the second row, we don't just put the amount of the transaction. We have to first start calculating the new balance. The new balance is the money that is resulted from the previous transaction. That is the the amount resulted from the previous transaction. So here we know that before cash was $0, and then when there was an investment, it increased to 5,000. So the new balance is $5,000. Okay, for cash. Okay, and see that I am not putting any sign, not plus and no minus, because for balance we don't need to put any sign to it. 0 here, 0 here, 0 here, and here our owner's equity has the new balance of 5,000. Okay, and here let's read the transaction. Pay cash for insurance, $1,000. When cash is being paid, obviously you have minus cash. Okay, less cash for you, right? Because you are paying money. And what are you paying for? You are paying for insurance. Insurance is something that protects you. Okay, I think I misspelled insurance right here. I'm gonna correct it. But anyway, insurance that has the value of $1,000. Here I am going to put plus $1,000. Okay, and the rest of them, they are intact. Okay, now we have finished the second transaction, and I am going to calculate the new balance before I start doing the third transaction, right? So 5,000 minus 1,000 give me $4,000. So starting from the third transaction, I have $4,000 of cash available. Supply, how much supply I have? None. Insurance amount, I have $1,000. Account receivable Ranguliao, $0. Okay. Account payable Martinelli, no. And we have Juanchito capital, that is $5,000. Okay, very good. Now the third transaction, it says bought supply on account from Martinelli office store, $250. Okay, so I am buying supply on account, meaning that I am not using any cash. Okay, when you see on account, be aware that on account means credit. You are buying something on credit. Alright, you are not paying money. So cash, what do? 0. I'm not paying any cash. Supply, okay, I do get supply. They give me supply, and here I have to put plus $250. Prepay insurance, am I doing something here in this transaction? No, nothing. Account receivable Ranguliao, no. It has nothing to do with Ranguliao, which is the do right here. And account payable Martinelli, I am owing this business some money. I bought supply from Martinelli office store, so I am going to put plus $250 of account payable. Okay, remember account payable is a debt that is against you. You have to pay for it. It's your liability. Okay, and here in the capital part, I haven't changed anything at all. So now I am going to again calculate the new balance from our previous transaction. So this is $4,000 intact, and here I have supply $250. My prepaid insurance stays the same, $1,000, and the account receivable Ranguliao, nothing. Here account payable $250, and my capital is still $5,000. Okay, and now we are going to move on to the fourth transaction. Sold service on account to 让股料 $500. Okay, so I just sold service to this guy right here. He said, "What's up? I need some service," and then I sold him service, and he's happy. But he's not paying me. All right, he will pay me in the future. That's called selling service on account. I'm not receiving any cash at the moment. All right, so cash. Do I get cash? Not really. Okay, supply, nothing change. Okay, so prepaid insurance has nothing to do with prepaid insurance. Account receivable 让股料. In this case, I own a debt from 让股料. I own debt. That means that he owes me money. Okay, this is a debt in favor of me. And account payable Martinelli. It is 0. It is intact. And here I do have to add, because when I sell something, my owner's equity increase. I put 500 here. Okay, so whenever a sale is made, I increase my capital. Okay, so now we are going to calculate the new balance again. I'm just gonna do it. And here is $500. I'm going to move it down a little bit. 250. I owe Martinelli, the company that sells me supply, this guy right here, 250. And Juanchito capital is, my new balance of Juanchito capital is $5,500. Okay, very good. Transaction number 4, pay cash on account to Martinelli office store. Now I'm paying my debt. Meaning that I have to spend money to pay my debt. So here minus 100, and supply is intact. Prepaid insurance doesn't change. Account receivable 让股料. Okay, it doesn't change anything. And here account payable Martinelli, guess what? It decreased. Okay, when I am paying my debt is less. And here account owner's equity, it is intact. Very good. And now I'm going to calculate my new balance. 4,000 minus 100 is $3,900. New balance for supply, again, it is the same. $1,000, doesn't change. And account receivable 让股料. Oh, he hasn't paid me yet. Okay, and Martinelli, I owe him less money, right? From 250, it becomes 150 because I pay him $100. Now here, my capital is still $5,500. Okay, very good. Transaction number 6. Withdrew cash for personal use. This is withdrawal. Okay, Juanchito is taking money out of the business for his personal use. Maybe he just need a break and go to a resort to relax, eat some good food, go to the swimming pool, and go to the beach, make some sand castle, whatever leisure he may enjoy. And that is $100. Okay, in this case, cash decrease, right? Because business has less money. Okay, and supply is intact. Supplies doesn't change anything in this case. Prepaid insurance doesn't change anything in this case. Account receivable, not receiving any money from 让股料. It doesn't want to pay, and Martinelli the same. And here you see that I'm taking money out of the business, and that means that the capital decrease, right? I'm gonna have to subtract some money out of it. And here the new balance is 3,900 minus 100 is gonna be 3,800, and it's 250 bucks. 1,000 the same. Here is 500 bucks, and this one still the same, 150. And this one, owner's equity, obviously it decreases. Alright, transaction number 7. Transaction number 7, receive cash on account from Ranguliao. Oh, finally, this deal is like, oh, I'm sorry, Juanchito. I owed you money and now I'm paying them back. Okay, very good. We can still be friends. And he is paying 300 bucks. Okay, he is paying 300 bucks. Even though that's not the total amount of debt he owes Juanchito, but still that's something, right? When someone gives you money, you're not gonna refuse, right? You would take it with happiness, with joy. And now we are going to here, since you receive cash, you have to put plus 300 bucks. Supply doesn't change. This prepaid insurance remains the same. Okay, account receivable Ranguliao, it is obviously changing, right? It is decreasing 300 bucks. Okay, since he pays you money, right now he owes you less, right? That's the logic. And here 0 0, right? Now your cash increase definitely, hooray! So it is new balance 4,100 bucks. Supply is still 250. Okay, and prepaid insurance remains the same, 1,000 bucks, doesn't change. Account receivable Ranguliao, he owes you $200 only. Alright, he pays some of the debt. And you still owe Martinelli 150 bucks. And capital is 5,400. Okay, and now the last transaction, then we will be able to calculate the final balance. Last transaction, receive cash from sales. Alright, so you just make some business, you know, you make your business, you wash people's car, you do detailing and all kinds of fancy car maintenance, and then you receive 200 bucks. That's pretty good, pretty good. Okay, you say receive cash. Receive cash, your cash increase, right? Plus 200 bucks. And this is 0. This is 0. This is 0. This is, yeah, that's Ranguliao's debt. So it's this is Martinelli's account payable, still 0. Here in the capital part, you have to increase it. When you make a sale, you increase your capital. And here you are going to put 200 bucks. Your final balance, calculate the final balance, 4,300. And here you have 250. Here you have 1,000. Here you have 200. And 150 you owe to this guy right here. And then here you have 5,600. And now let's do a checking procedure. This checking procedure is you need to take out your little calculator to calculate, to see if you are doing a good job or not, right? We know that the accounting equation has to be a balance. Asset has to be equal to liability plus owner's equity. That means that this part up to here is asset. This accounts, when you add them up together, the sum has to be the same as the sum of this part. And so we're going to calculate, cross our finger. Well, we shouldn't do that, but we should hope that we get a good result. So it's $4,300 plus 250. This guy, that is your supply, plus $1,000 of your insurance, plus your account receivable that Ranguriao owes you. You get 5,750. So I'm going to just write it here, 5,750. Yeah, you see 5,750 is total assets. Alright, and here is the right hand side of the accounting equation, liability and owner's equity. Let's go ahead and sum it up. You have 150 plus 5,600, and that is 5,750. Oh yeah. So that is liability plus owner's equity, and you get 5,750. Alright, so the two guys are the same. Wonderful. There's no mistake. Perfect. We did a good job.